All right, happy Monday. In this week's recap, Wall Street maintains its risk-on mood even as tensions grow between the U.S. and Iran, influenced by a White House tweet and a dovish signal from the Federal Reserve.
Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update.
The S&P 500 hit an all-time peak of 2964 in intraday trading on Friday, while improving 2.2% across 5 market days. The Dow Jones Industrials Average and NASDAQ Composite posted respective 5-day advances of 2.41% and 3.01%. In addition, the MSCI EAFE benchmark of overseas stocks rose 2.58%. A White House tweet and the latest monetary policy outlook from the Federal Reserve sent the bulls running. These were the top 2 financial news items in an eventful week. A week in which the value of West Texas Intermediate crude oil rose 9.4%. The price of gold went above $1,400 for the first time in 6 years, and the 10-year Treasury yield fell below 2%. Treasury yields fall when their prices rise and vice versa. The central bank stood pat on interest rates this month, but the expectations of some of its policymakers changed. About half of the 17 Fed officials who have a say in monetary policy now project either 1 or 2 quarter-point rate cuts by the end of the year. As recently as March, no Fed official saw grounds for a 2019 cut. Markets interpreted this shift as a sign that the Fed might soon ease. While a rate cut is by no means a given, traders now believe that the Fed will make either a quarter-point or a half-point cut at its July meeting. A day earlier, stocks rose after President Trump stated that he and Chinese President Xi will be having an extended meeting at this week's G20 summit in Japan. Investors were encouraged by this note, sensing a chance for progress in U.S.-China trade talks. And at today's final thought, with tensions persisting between Iran and the U.S., investors are keeping a close eye on both commodity prices and stock indices. Economic or geopolitical developments could heavily influence the short-term movements of the markets.
Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. If you'd like to learn how I give my clients life savings the attention it deserves, visit me online at www.erichagan.pro. If you'd like to get financially organized, go check out www.nocostfinancialdashboard.com. And lastly, if you'd like to take control of your 401k at work, visit us online at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.